Hello traders, Mr. Pip here. I haven't made a video in a while. I thought it might be easier to create this video for you as opposed to presenting a chart with a bunch of lines drawn on it and some explanations. I know it just complicate the hell out of everyone. So to keep things simple, I decided to make this video. We're going to examine the order flow here. And order flow is very important to our trading. It's important because it allows us to have an expectation, and expectations are also very important in our trading because those expectations are going to allow us to determine whether we should cut a trade short and take profit early, get out of a trade because it's just simply not going to go in our favor, or let a trade run. Now we do that and make those determinations based on the order flow analysis that I'm going to show you. We have here a Aussie dollar 60-minute chart from a couple of days ago. The time period, the instrument is not important. I chose this one in particular because I wanted to keep things simple, and most of you are used to time-based charts, so therefore I chose the 1 hour time frame, but the analysis is the same regardless of time frame or instrument traded. So what we have here is an initial move over here, which it's a weak new structure high, so we expect a deep return. So the return, which is also known as a correction or the pullback, is very deep. It's extremely deep. Almost comes down and retests this low right here. Closes slightly above, so we don't get a new structure low. And then we expect from this a weak pullback. We expect a weak pullback because we had an increase in momentum to the downside. Okay, I'll explain what momentum is in a minute. But then price comes up and has a lower high and a weak lower high, as it stays relatively shallow on the pullback side. So on this weak pullback here, we expect a strong projection. Okay, so now let's get into some of these terms. Okay, projection is the distance between this swing low and the new impulsive swing low. Okay, it would be reversed if you were going in an uptrend. So this space between here and here is what we call projection. Okay, that is important because the longer the projection, the more strength, because it indicates that price is accelerating. Okay, the shorter the projection, the weaker price is getting, and therefore breaking down. Okay, then the other term we used loosely earlier is momentum. What is momentum? Momentum is the angle or pitch in which these swings are occurring. As you see, this is the highest point here, so we'll use that one to this lowest one. As you can see, we have in here from this one to this one, we have momentum increase, right? We have a stronger pitch or a stronger angle. And in this one, we have a decrease in momentum because we have a weaker momentum. We have a decrease in the pitch or in the angle in which price achieves from the high to the lowest point. So that is one of the three things that we look to identify in price breakdown or acceleration, okay, in strength or weakness. In here, based on momentum, we see that as this trend progressive, it is getting weaker. Okay, now from a projection standpoint, we see that this swing low right here achieved is significantly lower than the previous one, right? So we had an increase in projection from this to this, right? So that tells us that price is accelerating or gaining strength. So we have two things here that are consistent with gaining strength. Well, we have an increase in momentum and we have an increase in projection. Okay, those are two out of the three things that we look at to identify whether a trend or a move in a particular direction is strengthening or weakening. Okay, and then we see here that on this third leg right here, we have a even greater projection achieved. That tells us that we are strengthening from a projection standpoint. So we have one out of the two things that are telling us that price is strengthening. We see that we have here a increase in momentum, we got an increase in projection. Those are two things that sort of cancel each other out. We're starting to see some weakness here. Can we expand on that and touch upon a third? Because 2 out of 3 is better, right? So of course we can. So here we have what's called depth. Depth is from the swing low to the corrective swing high. Okay, from the swing low to the corrective swing high. From the swing low to the corrective swing high. And from the swing low to the corrective swing high. Okay, let me use this as an example here. Okay, now I know what some of you may be thinking, oh, we got a bunch of little swings here, how do you account for that? The point is, you can account for it. You're just going to create a whole bunch of busy work and it's all going to end up in the same place. My suggestion to you is to keep things simple and pick clear swing lows and swing highs. Clear lows and swing highs, that there is no question. Everyone will have to agree that this is a swing low and this is a swing high, this is a swing low and this is a swing high, and so on and so forth. That way you keep things simple and you keep things consistent. You know, if you ask 100 people, where's the swing low here and where's the swing high, they will all have to say the same thing. That is how you know that you're using the right swing for this, or that you're keeping things as simple as possible. Okay, so over here we have you know, our first step. This kind of doesn't really mean much other than we expect a nice pull here, new structure low, and then we have a relatively mid-range to slightly deep pullback, but price closed here. You know, it closed right in around structure. So our expectation is that we get a pullback to structure. Okay, and that happened, and then we have a humongous explosion. We have an increase in momentum, an increase in projection. This tells us that we should expect a weak pullback. So the expectation, to have an expectation that prices can come all the way back here to structure, is unreasonable. Okay, can it happen? Sure. Will it happen? Occasionally. Usually it will not happen. Okay, it is unreasonable to expect that an increase in momentum and increase in projection will give you a pullback way up here to structure. That would be unreasonable, something that we shouldn't expect. But we should expect a weak pullback, and that we do get. And we see that price comes back here, sellers start entering the market, there's a consolidation period where there are no buyers present, and therefore the market does simply what it did previously, and that is roll over. And we have a huge increase in projection here, extended over a period of time, which means our momentum decreased. Okay, so because our momentum decreased and we were sort of expecting a shallow pullback because of this, we see that we're going to see either a period of consolidation or price sort of slow down and then eventually maybe pick up some steam. Why? Because there's a lot of order flow here that's still driving price down. There's still some strength here in the bears. Okay, but the increase of momentum tells us, the decrease in momentum tells us that we are approaching the end of this trend. Okay, and as we see the price comes up, then this is where the short-term order flow helps us, these smaller swings. We see the price comes up, pulls back to structure, fails to make, no, it does make a new structure low, as this closed is higher than this closed, but it doesn't really matter. Overall, it does not get down here, it does not produce a significant new structure low. This tells us that we're likely to get a deeper pullback here, and on the short-term order flow, we see that we get a new structure high. What does that tell us? That this tells us that we should get a higher low, and so on and so forth. The market does that. Now, for us to say that the market is reversing at this point is still premature. Price will have to get above this area right here for us to signify that the trend is reversing or correcting this move down here. So you see price comes up. We're expecting a deeper pullback because of the weakness here in momentum. So price does that, achieves one, does very deep, almost 100%, okay, of the previous swing. So that tells us that our expectation of a new structure low long term, okay, in the long term order flow is unlikely. It is unlikely that we're going to achieve a new structure low here. So price comes down, okay, produces a higher low, very weak here. So because we, with strength here, produces a higher low. So that tells us that a pullback right now, at least for the time being, should be weak in nature. We should not see right away a price break above this or a new structure high. That would be unreasonable because of such a deep pullback. But we do expect a mid to deep pullback here in an area of structure. So we look across, we see we have light structure here, here around this level. So we should see that price may come to this area before it tries to do another impulsive leg to the downside. And we see the price comes up near this area right here as expected, and price comes down, And now from this point, are we expecting a new structure low? The answer is no, not at this point. And I know this looks like, it's contradicting because we have a lower high in essence, but this lower high is short-term order flow, just like this is. So you have to be aware of that and not let price fool you into what its overall goal is. Overall, price on the short-term order flow made a new structure high. On the longer-term order flow, it produced a very deep pullback. We expected a retest or a higher low. We got that, so immediately we're looking for price to have some short-term swings that are somewhat contradicting, but the longer-term order flow suggests what? That price is what? Moving higher, right? We produced a higher low on weakness here. I'm sorry, yeah, on weakness here, and we are expecting price to, at the very least, make an attempt to either push higher or test these highs. Right now, price is correcting again, is moving lower. We are expecting a higher low or a retest of these lows again. Price did not do that. It achieved a higher low as expected, and then price comes up and makes a new structure high in the short-term order flow. So we are working towards our expectation of a retest. That is how we can feel comfortable in taking trades in and around these pullbacks here, taking a trade to the long side, because ultimately this area, according to the order flow, has a high probability of being tested. And as price comes back, produces a significant new structure high, right, on the short-term order flow. So the short-term order flow suggests a pullback to where? Somewhere around this area, right? Structure. Price pulls back a little deeper than expected, right? So that tells us what? That there is a slight breakdown here of price. So our expectation of achieving a new structure high beyond this may or may not happen. We're starting to see some breakdown in this process. So now our expectation here moving forward is a weak new structure high from here. Why? Because we went deep. So price comes up, makes a pretty strong, so we see price acceleration, we see momentum increase from the previous one. So now price moves stronger than expected into this area. Pretty much does a retest, pulls back. We expect a light pullback here because of the increase in projection, an increase in momentum. Those are two out of the three things that tell us the price is getting stronger, so we expect a deep pullback. Okay, we sort of get that, and the price starts drifting sideways and then does what we expect it to, produces not only a new structure high here, but a new structure high here. We have two things that are telling us that price is behaving in a manner of which we anticipated. Okay, so keep that in mind. I don't want to keep this video too long. I'm running out of time here. I'm sure there will be questions. Post them. I will make other videos more detailed if I need to, but I wanted you to get a general broad content as to how this is done and how we can use that to have an expectation on price action and price movement, and that can help us determine where we're going to take profit, when these order flows, this order flow analysis is mastered, and you can read the order flow like you can read structure or bar by bar. Any questions, post them on the thread. I'll be happy to answer them and produce other videos as necessary. I like to keep these short because they can get rather long. I know this is not very detailed, but again, just post your questions and I'll try to get to them. Thank you.